Hello, West Pacific Market Analytics, and it's Glenn with you here on Sunday. I've been talking about getting out this commodity futures trading report. I want to just go over what I'm trying to do here is put together all these different reports for the YouTube channel. And it's not to say we're going to be cranking these things out on a regular basis. I just want to have these reports. Commodity, we might take a look at it once a month, if not maybe even once a quarter. But the idea is we want to keep an eye on some of these trends because they're definitely going to play into what lies ahead within overall economic structure. And I'll show you what I'm talking about that today as we get into this, what I mean by that. Because you think you can just look at one thing within the market and then understand it, but in reality there's a lot going on under the surface, and the commodity area is going to show you a lot that's going on with the real strength within the actual economy. So that's part of why I brought this into the fold. I'm just trying to put together all these key reports that we're going to rotate in and out of. I put all these together into key lists that I created to be able to run these videos. I've got one or two, maybe even three more I want to work on. I'd like to do one on the bonds, so we're going to be doing a bond report. I'm going to start in on that this week because that's another area we have to watch because, the Fed uses the bond market pretty much to help support the market. I mean, and the bond market is so key because it's so much bigger than the stock market, and it's something that the Fed's mandate allows them to use to prop prices in the market. So we'll look at that. Sorry about those beeps. That's somebody over on my Discord platform keying in. So if we get a few of those while running this video, it is what it is. So anyhow, that's where we're at. We're going to get into this right now. Let's dig in. I hope you're having yourself a great weekend. Thanks for tuning in. Hit the like, hit the subscribe. And again, if you're interested, we put all these models over on the Discord site. If you want to get a hold of me and talk about joining that site, destinytrading@gmail.com is how to get a hold of me. And I'll send you some information about both what we do and information on the Discord site. So let's get right into it here on this commodity report. Let's dig quickly into the disclaimer. These charts and updates are for educational and entertainment purposes only, so quickly read it. Now look, we're going to be looking at even gold and silver here, and I know how emotional the gold and silver traders get, so listen, take that out of it. I'm just going to give you the analytical data here based on physics-based and hybrid-based trend modeling, there's no opinion, okay? Everything's rule-based. We're going to look at what it has to say. Gold is not topped in the model, but I'm going to show you what the model seems to be saying. Don't get emotional about it, okay? I mean, we're still pushing up on this cup and handle pattern. I'll show you that pattern. We'll take a look at it. And again, let's go for it. So here we go. Let's dig right in. So I want to start off actually with this gold model because I was talking to my members about this because I find it so interesting. Because what's so interesting here with the technical data is, again, you can see we're going back here into 2006. And again, here is the curvature of time, right? I've talked to you about this curvature of time within the model. And the curvature of time, as you can see, has now topped out. The curvature of time actually in gold topped out. You notice we had this top here in gold. And what's interesting, the curvature of time topped out with this high right here. And that's curious because not only top out with the high in gold and it top out with the curvature of time, again, the directional circulation and a bear cross here now forming this downward channel I call the V channel. So in other words, price eventually had to end up here in the V channel. So it's really, really interesting looking model. And let's not spend too much time on this, but I just find it extremely interesting. So in other words, the top out in velocity, V channel above, top out in the market. But you notice this is the left side in the start of this cup pattern. So we ended up here in 2010, starting 2011, starting to the left side of this cup. And then you notice we formed this really nice cup pattern, topping out nicely right here with the handle. Here's our handle formation. You see it right here, cup. And then here's a very nice handle. This is a very classic technical pattern. And then you notice we had this triple top right here. You see it, 2074, 2069, and then 2072. A little slightly declining trending top. We carry that over to, it went a little bit higher in the top here, but we still got to draw the top of the cup at that level. And what's so interesting is, look, right there. Let me zoom in on that because this is so interesting. You notice when the handle broke out, was right here, a breaking out of the directional circulation V channel. And so you say to yourself, well, hey, Glenn, how was it able to break out of the V channel? Well, because that's where it broke out of the handle formation, and now it had to put in this cup. Now, if I draw the size of the cup, that puts it up to this line above, which is at about 4,100. Now, from technical standpoints, we don't necessarily have to go all the way up. I mean, we could. We're above 61.8% on the retrace here upward on this handle. And yes, it could still push higher, but it doesn't have to. So we're going to see how high it wants to go. But what you need to understand in this pattern is once this extension, which is the extension, and of course you see the line right here, the way you draw the extension, of course, on a cup and handle is you take the lower portion of the bowl of the cup, draw it up to the top where the handle broke out, and then that line becomes your extension. And so that extension puts us right up to there. You can see above, still at 4,100. Don't have to go there. But what's interesting is once this cup and handle pattern finishes, the rule is we have to then go back into the V. So that's going to put price back below the blue channel here at Dock, which currently rests at 1,600. It's going to collapse back down once this formation is complete. Now understand, it's not my opinion, okay? It's all based on the rules. So let's go back up to the start of the model here. Here's the gold model. You notice how perfectly it's trading. You notice here as well, we had a breakout here. This is a little bit different, so we don't have to necessarily come that far down because based on this, it doesn't look like we can have that big a retrace. 1,600 will put us way, way down here, which we can do, but that's something I wouldn't even talk about near term. Right now, we're going to get a corrective move back into the V here. You can see we are still rising up here in the trend. Notice everything is still rising up, so we still haven't topped out, right? I mean, it still needs to go higher. Here's another look. You can see the signal rising still. You can see the trend rising still. You can see the mock signal rising still. You can see a breakout here above the V channel. It's still pushing up. So, you know, you don't want to talk about it topping out until, of course, this pattern finishes. So we want to see, but you can see we started to get some divergence here within the velocity. So in other words, you notice the velocity started breaking here back in May and it continues to drain. So during that big sideways movement we had, and then of course we pushed back up here, we were seeing a drain or selling ongoing within the gold complex. But again, it's not done. So we're going to want to see. Again, here's this model here. You notice here I put it in. The extension is 4119. So if you want to do a full extension of that cup and handle pattern, 4119 would be as high as it can go. Does it want to go that high? Let's see. Let it top. So that's it on gold. Okay, so that's all I want to say there on the gold complex. There's no need to get into that too much more than that. Let it top and then see what it wants. Okay, now on silver it kind of is mirroring. You can see this is the silver model here. I modeled silver in this particular model here so you can see it nicely with these blue candles. You notice here the bottom right here, you notice the trend now is well below the price. You see this nice little doji candle we put in right there. Do you see it? That nice little doji cross up there. That could be the top. I'm feeling pretty good that we've got the top in silver. You notice we're well above the trend here. And the V channel is all the way back down here at about 28. So this is going to break and then this is going to come back down. And I've got a target down around 17 eventually for silver to get. Now, we're going to have to see. It's not just going to drop straight down. You know, we're going to have to see how it wants to develop. But it is topping out, and then we're going to have a retracement in the gold and silver complex ahead. Now, it's not there yet, okay, because we can see even here on the silver model again, here we're looking at silver. You notice the trend's still rising. It's been rising right up this trend all of 2024. You see here the velocity's rising, the trend's rising, and it's just working its way right up. And you can see here how different it was on the other side back in 2000, 2021, 22. You notice that we had that huge rally coming out of 2000 where, of course, with all the money printing, money was chasing the inflation trade. And then you notice it just churned sideways as we topped out here in velocity. Notice how nicely it traded to the trend here. And then as the velocity drained, as the trend drained, it dropped. It dropped from 26 down to 18, 17 here. And then we started back up. So we got to wait and see. We'll continue to watch that. We'll look for that top out, and then we'll decide what it wants to do. Nat gas, let's look at that. I don't like to talk about nat gas too much, but nat gas I think is going to push lower. You see right now it's been working its way lower. Let's not talk about this huge rally back in 22. That's a different thing. What I want to do is just talk about current structure. You notice right now the velocity is coming out. We're kind of below. It could push up a little more. I'm just not interested in any way, shape, or form in NG right now. What I'd like to see is for this to come back down here and maybe get back down here to the V channel around $1.70. $1.70 in nat gas might be kind of interesting, and I think we could get that ahead. So I kind of want to watch what that wants to do. We were looking at this USAR. I don't know if you're familiar with that. This is the rare earth minerals. Again, I want to look at rare earth minerals and commodity. I just basically put this up because one of my members was looking at it, and this thing has been volatile as all heck. Look at these rallies. 5 back up to 18, back down to 8, back up to 15, back down to 9, back up to 19. Now those rallies, it was basically bucking around there, because you can see here working very nicely up here in our V channel, our velocity channel, bear crossing out, coming down, working its way back up to the new V channel on this side. But you notice in the rare earths now, we do have a top out in the dot curve, telling us now that price is going to want to work lower. So you can see at this $19 price, that was a sell because you're above the V channel curve. We still haven't fully topped out on the velocity, but it's looking ready to break back down. You can see the trend breaking. It's only going to be a matter of time till this trend goes out, and then I feel very much it's going to go lower. If we look at here at the gate model, we got a target of about 1273. You notice, however, the trend's draining pretty good here, but we're pricing pretty decent in the V channel right now. Here's our lower curve here, and you notice back here in July it held here at 932 at the channel, and the channel right now is sitting there at about 11. So we're kind of sandwiched here. As you notice, it's coming out. It's going to come down here and test the gate. There's no trade, and I told one member he wanted to play it long. I said, no, you just don't play this setup long. Let's keep an eye on the rare earths. Let this all settle down, but I just don't like buying something that's now got a topped out V channel. What I want to see is for this to get a big sell-off way down here, like we had back up here, and find something really cheap, and then look at a trade in the rare earth minerals. That could be interesting. Let's look at lithium here real quick. Lithium, you can see trend is still breaking away on the really big picture model here. I don't like it when the trend is well below the price. We've had this little snapback rally, which I'll show you in just a moment, but everything's had a snapback rally out of this April low. And I'm going to get into that with a different model into one of our reports next week. That's more probably we do an update on the SPY QQQ report, because everything's indexed. We've now got record ETF exposure across the globe. And what happens is you'll get these rises in something that doesn't make any sense to the trend because it's indexed, right? They've got lithium stocks within, let's say, an energy ETF, and that's going to pull up lithium. So lithium is getting pulled up simply because it's either short covering or it's simply indexed in. So you don't want to be long lithium right now. You notice it tested here the bottom of the V channel. Now the rule is once trend leaves the V channel, so you can see back here in 2020 at the $17 price, the trend held. You notice how the trend's above here? And we came down and we tested the V channel, and then trend built back up. But when you have trend below the channel like this, we can now leave the V channel. There's going to be a great trade ahead back into lithium, because it's going to want to come back up here again in the future. Maybe after we get this big sell-off, and then we'll have another big rally up in lithium. But right now, lithium, I just don't like it, and it's still in the process of topping out on this current rally. You can see up here these last couple months out of that rally, 35 up here to 47, working right up here. This is a bearish looking setup, and we got a lot of blue like this with the trend right at the top of the model. After this is done, it's going to sell off further. So right now there's no trade in lithium. It's getting set. Again, you can see it here. You notice here topping out at the top of the model here, back here in November, December of 2024. And now we can see it topping out here in August, September of 2025. So it's setting up here to finish off, and then it's going to continue back down. So we don't want to play around with it. Let's look at uranium really quick. Uranium's looking real toppy. I would not be playing around with uranium up here. If I did own uranium, I would be putting in a sell order, simply because you can see price here is right up at the top now of the mock channel here. Here's the V channel. It's priced very nicely up the V channel here. You notice it just kind of working its way up inside of it. I don't like it up here. Once we get to the top of the V channel, let me see if we got another uranium model. We'll have to pull up another one. But I just don't like something at the top of the V channel. Let me put that one in. I need to pull up another one. But you can see uranium was pricing back here, $8-9. So this whole rally out of 2020, all energy has gone up because it's been the inflation trade. And you notice we were just at $19 here just a few months ago. We've had this huge rally up to 42. If you're in uranium, I would definitely be taking that off the table. Now I'm watching the energy sector very closely. And I think what I want to do is let's go down. We'll look at crude in just a minute. Let's just keep going down this list I put together. Here's the master limited partnership models, the MLPs. MLPs are a great place to correct the dividend, a great place to park money in an inflationary trade. We've gotten pretty frothy up here, and you notice we've gotten our first candle breaking lower. I would not put a sell order in just yet on the MLPs, but there is some cracks I'm starting to see in the oil services sector, and we'll look at that in just a moment. I would be definitely considering here pretty soon to start taking my money out of the MLP sector. Even though, of course, they pay really good dividends, you obviously don't want to sell the whole portfolio, but the more speculative stuff, you'd have to analyze your entire portfolio, MLP, MIMLP, taking a look at those, and then deciding which ones have the worst looking models. But the overall group, that's what it's looking like right now. And you can see here in energy, we're modeling energy right here. You can see energy is still holding above here because you notice since 2021, the keeper of the gate right here, you see how this trend is in a positive mode here. That's been able to keep the price above here, and so it's still rising up. But it's going to break at some point because you can see we've now got the dot curve getting ready to start to roll over soon. We've got a bear cross here. This is the first indicator. This is the first shot across the bow, and we've seen layoffs starting in the energy patch. Two big companies already announcing they're cutting quite a bit of employment, and I think they see what's coming. So the energy trade is coming to an end here right now and is getting ready to have a corrective mode. This is corrective move lower. This is pretty frothy. I mean, you can see even back here in 2014, 15, 16, we were trading right down here, and now we're way up here. So the shot, I mean, this has to price down here to the V channel. So it's not a matter of if, it's just a matter of when this is going to come back down from here to here. So there is going to be a repricing coming in the energy sector soon. We got to watch that. You can see the trend breaking here. Let's take a look at that. You notice here in the energy sector here, this is 2020 when we had this big rally back up. It's interesting because notice it held right here very nicely at the V channel. And notice how it held right down here at the bottom of dock here in 2002's low. You see that right there? Traded right down to the channel. And right here, traded right down to the channel again and held. And now we're all the way back up the top here. We're pretty frothy, aren't we? Look how high up we here. We still got to see maybe this velocity. It looks like it's starting to develop and roll down, but we can see the trend starting to break here. So I'm starting to see some cracks definitely appearing within energy, and you can see that right here. Let's look at this one. You see it? See the energy rolling down here on trend? That is the bigger picture. This is the weekly. You can see the velocity coming out here. The velocity is coming out here, and what happens, the velocity will drain first, and then the trend will follow a little bit further. So you notice we peaked out all the way back in 2023 here, and now, of course, because of that drain, it's starting to break. So I am definitely saying be very, very careful here right now in energy. It's still some stuff that needs to happen, but it's getting ready to pull the plug. Copper, let's take a look at copper. Copper's done. You notice it's finally come right over here to its collapsing V channel. This is where it was supposed to price. You notice working up in the V channel, coming over to the V channel. The V channel topped out, and it's now starting to roll over. So copper is finishing up its top right up here. So the big top we've been in 2020. You know, that big rise up, and it's just all been chopping around here with the market. Here's the market. Look at the market following copper, right? Copper used in housing, right? Up, there's the market in red, down, and there we are going back up. So copper's been tracking the market since 2015, 2016. Before that, the market was blown, copper was above. But, you know, this V channel showing that we're definitely going to see some cracks ahead, which are probably going to be in the housing sector, which are going to impact copper. So copper is in the process of topping out, which would definitely be an overall economic indicator to what's going to happen in the market. Let's look at crude oil just really quickly. WTIC here, you can see it just trading perfectly in the V channel, 2016 through 2020 here. We had that huge move down, obviously, during the COVID crisis when all travel was shut down, and that was a panic move. But in of itself, it's interesting because it had to come down anyway, because you see the velocity was coming out way before COVID. And there's part of me, you know, that thinks, hey, let's get COVID going. We need to re-spark and print some money to reinflate the energy sector, since it's such a large component to the entire commodity, to the entire economy. But I don't even think it had anything to do with that, because you can see the big other mock channel here folding over, right? So right now, you know, we're still priced right. We're in the V channel, but we can leave the V channel, right? So the trend is breaking. The velocity is rolling over, and what I think is going to happen here is we're going to see crude oil work lower. and it's going to come down, and then we're going to have another rally back up. And let's see if I got on the model I put up here. I can show that to you. Yeah, here, I drew this one. Let's take a look at this. So you can see it, right? You see the trend coming down, the velocity starting to come out. So what could happen here is we see this start to come down here, right? I don't think it's going to get too far down. You know, right now I've got a price of about $50 on it, and then we'll see if it wants to go any lower. So it's going to work its way down here into 2026, maybe even down to 27, and then it will have that I think will then pull the trend over. So if we extended the trend out, you notice how longer term going out here, the whole complex is then starting to break down out into the 2030s. So this is a major top now. I don't think you're ever going to see crude oil back above this 126 level. I think now you're going to see it come down, have another rally back up, and then head down. That's long term. But for now, I'm definitely seeing a lower price in the crude oil complex. Let's see, I had one of the, here we go. We got a 74.50 on the channel. If it wants to rally up to that, it could. And then we got a 50.19 below. So we're trapped below these two prices, and we still got a little bit of work to do to get below this 50.19. I didn't put that particular model up. I'm going to be watching it, and so that would be what we want to test on the downside, and 74 on the upside. So crude oil just doesn't look like a very interesting trade right now. It's got some work to do. Now I wanted to just finish off this video with a couple of things. First of all, I want to show you steel because it's interesting. I want to show you some of the metals, steel commodities like steel and aluminum and chemicals. You notice finally at last that we're starting to see the trend break pretty aggressively here. You notice it rallied back up with the market. And I want to show you this different model I'm going to look at just in a moment. So we want to see now the velocity start to drain, okay? And that'll be another indicative of the top. Now you can see that steel is already draining on the weekly model. It's still got the trend is already broke here on the bigger picture model, and that'll eventually pull out the velocity. If the structure is still okay here, there's not a ton of weakness. So, you know, this next corrective move in the market down, you know, we're going to get a corrective move, and we're going to want to see how far it wants to go, but that's all it's going to be, is a corrective move, because a lot of these commodities are still a bit too strong for it to want to do too much. So we're going to be watching that. You can see here, I put this up, for instance, this right here, this is aluminum. Let me show you the aluminum model. So if you look at the aluminum model, that's completely different. You see velocity now coming out of aluminum. Here's that big spike down in the SPX in April, and then we rallied up, and you can see now the velocity is coming out. Even though we've had a rally in aluminum, aluminum is starting to break down. Aluminum, of course, going into a lot of components like air travel and airlines and all the rest. And anything related with that will be interesting to see. So definitely going to be seeing a slowdown in travel, and we can see that. I put here the industrial producers in aluminum. This is aluminum here. You know, China, look how much China produces. The U.S. is at number 13, and China is at number 1, you know, because, of course, we outsourced. It's interesting. Look at China, India, and Russia, the BRICS, top 3 producers in aluminum, right? I mean, that's our competition. The BRICS is a lot of trouble ahead for the U.S. There's no question about it. And then when you look at steel, the U.S. is still number 4. Thank goodness for that. But then, of course, you got China and India. We got Japan producing a lot of steel, and they're our partners, so that's good. But you can see China, India, Russia, and even Brazil in here. The BRICS are some serious competition. You know, it's a good thing that the U.S. still is producing steel here. But look at the difference. We're producing here, look at 79.4, and we got the tonnage here at 1.005.1. They're producing, what, 10 times the amount of steel in China than we are here? Boy, China, what a beast. And we can see the steel model, right? So it's breaking. Steel, the trend's coming out. We still got to see the velocity coming out, but we're seeing in both steel and velocity a top out. And so those we're going to watch here in the commodity report, because that's indicative of the overall economy. We can see the chemicals. That's a different story. We can see the velocity already breaking here in 2025. The actual indicator itself is still floating a bit. We can see the trend aggressively breaking, so we can see a breakdown in the chemicals area. And we're starting to see weakness in steel and aluminum. So we're going to be watching that. Oil services breaking down. You can see oil services, and what's interesting here is you can see even when we had this big market sell-off in 2022, look at how the oil services stayed really strong. So energy still was up here, right? So that was not indicative of a weak economy, was it? So, you know, the market came back up. And so now what we're going to watch going forward is you want to see a weak economy, then you're going to see things like the oil services, the chemicals, the steel, and all that start to sell off. And we're seeing it all starting to break here. So this is becoming a different dynamic as we head out into 2026. And you can see that the oil services now, and again, seeing those layoffs in that sector, we're already seeing in the models there, you can see oil services. Here we can see the XOP, the exploration and production. Same idea. The velocity is coming out here in 2024. We had this initial sell-off, you notice down here to 96. On XOP it held, and then we had a rally back up. But again, the structure is looking weak here. Again, toppy. So we can see that toppiness in energy. And then I've got one nat gas model I'm watching here. We're going to put this into the commodity report. Right now there is no interest in nat gas. You see the velocity coming out here for the last 3 months. You see the trend continuing to break lower. And we had a little pop up here in nat gas. Not a lot, you know, about 270 back up to 3 here. And you see how we get these pop-ups to trend, then they fail, these pop-ups above trend and they fail, and here's another pop-up above trend and it's going to fail again. So until we see a change in this trend, I'm not interested in nat gas. Nat gas is just not looking good right now, and it's most likely going to continue to go lower. So that's it for commodity here, this first report. I'm going to have, this is just an overall general report. You know, maybe we're going to, with some of these, once we see some things that look interesting, we can start to look at actual trading models. But I want to use this commodity report more as an area to see economic weakness that's then going to relate to the overall economy, going into recession and that sort of thing, and giving us more directional on what the actual market itself is going to do. Thanks for tuning in. I hope you enjoy this. Those of you that are interested in the commodity area, I think this will be a real benefit for you, and we will be putting this out from time to time. It may be a quarterly type of report, unless of course things change drastically, and then we'll pull it up and we'll run it on the YouTube channel here. Again, hit the like, hit the subscribe, get a hold of me at destinytrading@gmail.com. Glenn out.